Hello, everyone. How is everyone doing? Happy Friday, happy long weekend. Is everybody already taking it off? I guess everybody started their weekend already except for PMG. Alan Smith, the regular now. Alan even beating in Patrick. Happy long weekend to everybody, too. Wait for some more people to come in. But remember, Monday in the U.S. is Labor Day. The equity markets are closed. The futures markets are still open. Here's the schedule for Globex. Because pretty much everything's electronic trading now. Still opening at 5 p.m. Central on Sunday night. The equities close at noon on Monday. Interest rates close noon Monday. Foreign exchange, 4 p.m., and all these are Central Time. Energy, 1:30 p.m. Metals, 1:30. So it's going to be very light trading, but there is trading in the futures markets. Lots of them close early, and then they still open again at 5 p.m. So other things like lumber, livestock are closed. And if you're, so there we go. There we go. Who else is coming in? Good morning, Sterling. Good morning, Chris. Remember that the S&P September index rebalances Yep. Thank you for pointing that out, Sterling. So, big thing this morning was non-farm payrolls. Unemployment rate bouncing up. 3.8 versus 3.5 expected. Let's see. We have the non-farm payrolls, which they keeps beating expected, 150, 155, 179 printed now. For example, the other numbers were revised lower, like June payrolls originally. Here we go. Originally, June payrolls, 209. Revised last month down to 185. Revised this month to 105. So we keep getting these stronger prints and then the revision down. So take that for what it's worth. Not saying anything else besides that. But remember, also, why are you wondering if this still came in at 187 and this got bumped up because this is based off the survey, this is based off the government's calculations and everything else. Hourly earnings coming in a little weaker month over month. Year over year coming in weaker also. Hours worked going up a little. So what else do we have today? We have the ISM manufacturing PMI expected to still be in contraction 30 minutes after the cash open, 9 a.m. Central. Also pay attention to those employment figures and prices. All right, but when the non-farm payroll came out, the market started the rally, figuring that the Fed will have to maintain its pause. So that's why we're continuing to rally, but we already had the double patterns. So besides Broadcom, which did beat yesterday, but is down pre-market, you see pretty strong markets here. Across the board, energy still rallying. The groups, energy, comm services, technology, basic materials. Also remember, first day of September today. So you're going to get some continued rebalancing and moving into new positions. Fed Watch, I haven't refreshed this in a few minutes. Let me just see at this point. Yeah, see, September is pretty much a guaranteed pause. It's pretty much a guaranteed pause, and now March is the first cut. So with these weaker unemployment figures, March is the first cut. Fear and greed was yesterday in greed mode for a bit. By the close, it dipped back into neutral. This will probably bounce back into greed mode based off the opening prices. See who else is here. Anissa, good morning. Good morning, Jacob. Crude, Rich says crude to 300. Well, we'd have to have some significant global events for 300, but crude is rallying and looks to be breaking out. Cocoa still rules. Well, thank you, Richard. Where is Coco's channel? Good morning. Maybe Coco did start a channel. He's not in here a lot anymore. All right. So remember, we had the double trigger back on Tuesday, and we're following through. Little pause Little pullback at the end of August yesterday, but now moving through those highs. So again, yesterday we did not close yet above the 62.5, but we looks like unless something really interesting happens, looks like we're going to close above the 62.5. So then we'll have that other separate rule. So we should see continued prices. We are in daily cycles in the topping area, but the weekly still moving up. So we could see some choppier / pausing action going into next week, with the weekly cycle still going up, but we have the probabilities of still higher prices in our favor for the short-term bulls. Does this mean it breaks out to all-time highs? No, the patterns end before that. Could it keep going? Well, it sure could. Also, remember, we are in September. Historically, the worst return month of the year. Okay? That does not mean every year, but from my perspective, it's a good month. From now until about the middle of October is a good thing if you believe in portfolio protection or don't want to sell stuff and you want to protect for some possible downside shocks or some pullbacks. That's the way to do it, especially with your VIX being at 13. You can get some pretty cheap protection out there. So, not telling you what to do, but it's something I consider, especially every September going through about mid-October. NASDAQ breaking through the upwards channel. Also, we've had the double trigger. NASDAQ did not close lower yesterday, but the first target looks yesterday also NASDAQ did close. It closed up, and it also closed above the 62.5. So we invoke the 87.5 probabilities, which also takes us up to this resistance ledge at the end of July, beginning of August. So I'm going to be watching for continued price action higher. The next target areas is about 15.7 to 15.734, and then 15.881 to 15.932. They did not go on pullback levels, but the key pullback level for the S&P, sorry about that, into the open is about 45.35, and then I'm just watching about 45.25 to 45.27. For the NASDAQ, it's roughly right around 15.570 for the key pullback level. If we do get any selling pressure, the Dow, which had the biggest reversal yesterday, coming back, holding above yesterday's close and rallying back up. So intraday for intraday targets, I'm using the little mini harmonics, especially 35,025 and 35,075 on a continued rally. We're stalling out right now at the 50%, so going to be watching that going in the open. But that's a little tip of when we get this bigger pullback bar, how I use intraday levels. The Russell, yesterday hitting the first target, today hitting it again. The second target on the double. So first and second targets hit. Final target 1929. All right. And then let's flip this around also. Let's flip this around. So you can see, if you were trying to roll it into a higher position, you'd really need, or a larger rally, you'd really need to close above 1948. What's interesting in the Russell is between 1925 and 1948, that's the big rollover zone. So I'd just be cognizant of that if you're trying to roll a double thing into a higher play. You'd really need a close above 1948 before that kicks in. So that's what we're looking at there. We already looked at this. The DAX is pretty much, after triggering the double, has just moved sideways. Not much to talk about there. Nothing's really changed. By the way, you had the roll in the futures, the Treasury futures. That's why you see this. That's why, if you hit the back adjust, you can see right there. But then the targets go off, so we have to judge. That's why I'm just, so you'd see here with the targets, it's virtually hit on the doubles. The double has been hit, but that's why there's the gap there. So the targets have been hit on the future, on the mini double. Looking at it from a higher perspective, the next key area would be on a continued rally back to about 111.29. Where else do we sit? Do we have a mini double in the spiders? We'll get to the spiders. Hey, Eric. Saw 801,140 call option yesterday. Well, expired today in Amazon. Oh, well, there we go. Thank you for pointing that out, Sterling. We should be getting still the bear steepening back in play with the pullback in the 2-year and the rally in the 10-year in yields. So bear steepener is kicking in. Dollar index after non-farm payrolls yesterday, we got the bounce move, a little pullback. But the dollar's holding up remarkably well after that non-farm payroll print. So keep an eye on that if the dollar keeps holding up and holds the rotation zone. Crude. We do have a potential double top. Long way off from triggering. I'm watching for the breakout play. That would be the only thing that would take me out of bullish mode now in crude. Other than that, 86. You got some key resistance level right around here. Remember on crude also did not point this out, but with the little bit of pullback on the daily, we did pull back to the weekly. Also, this is a very key level on the weekly because it would be out of the way of the weekly rotation zone. So as long as that does not trigger, going to be watching the next key levels. The next major level is about 88.50, which could really start kicking in some inflation stuff again. Remember from the last podcast I was on, I'm recording another one with Bob on Tuesday for Futures Edge. So we have this chipping away at crude and now breaking through. So found resistance back at the April highs when we pulled back at the August and now breaking through there. So I'm definitely watching for continued higher prices. My minor level is about 86. My major level is closer to this 88.50. Natty Gas still holding up, looking to try to break out after building this higher solid base. So keep an eye on that too, especially going into fall. Gold, yeah, you do have this. It's more like a channeling and a breakout. It's not even a sloppy double. I'm now watching. We had that resistance at the 62.5, but if we close above 1975, really going to be watching for continued gold prices. And if we then break above 2010, really going to get, and close above 2016, really going to get short-term bullish on gold with falling through to higher. 10-year yield on the yen is starting to drop again. So watching for potentially a bigger pullback, especially if we break down through 144.50. Euro's not pulled back enough for a double pattern. You see here pulling back between that 50 and the 62.5 and now trying to base. So going to keep an eye on that. But if we break above about 109.50, going to be watching for a longer term, at least a more substantial bottom being put in the euro. Pound, not much strength coming in here, a little bounce, but I will be watching more aggressively for a rollover play in the pound. Let's get to spiders and the Qs. Spiders, what was the, do we have a mini double in the spiders? You got to give me more context. Do we have a mini double on, we don't on a shorter time frame. You're going to gap up today, and that's not really, and this isn't a mini double bottom. The only big pattern we still have is the spiders yesterday hitting the second target and the 75% harmonic. And then the final target area for the double is 445.44. And then the 87.5 rule, which we closed above the 62.5 yesterday, is 456.14. And you still have a gap left behind to 456.48. So you have a lot of upwards price magnets over the next little bit. Cycles are getting a topping area on the daily. but also still moving up on the weekly after a strong rotation up from the weekly rotation zone. Pullback level, the key things would be if we did roll over 451.65 to yesterday's open, and then it would be the gap fill to 450.35. For the Qs, closing above the 62.5, coming up hitting the stop reduction target on the double. So the stop reduction target's been hit. The next major level for the Qs are 383.36 to 383.82. All right. So, and then key stuff would be on any rollover play. I'd be looking at yesterday's high first, 379.72 if we do pull back, and then to the close, 377.99. Jim Iorio calling, but yeah, in the tweet, payrolls, that's what I talked about. The June were revised in July to 185 and then in August to 105. They keep every month has initials been higher, and then every month has been revised lower this year. Every month. So take that for what it's worth. It's what I started talking about in the beginning of the live stream. But I think you were late, Sterling. I think you were late. And now you're reading your Twitter feed instead of paying attention to me. Oh, I'm just joking. All right. Key levels still on Tesla is 266.69. More price cuts in Tesla. Slight gap down. Still watching for a rollover play unless we got the close above 266.69. So not much has changed there. NVIDIA still looks like we're going to try, if the markets are strong, possibly take out that 502 area today. But we do have the double still in play. You talked about Amazon. Sterling. Let's just see something on this little pullback area. At 62.5, so really be watching this on the close. 138.74. So it looks like it's going to gap above that, but then that could be really to return to the most recent high area after coming back down to the, and this did form a proper double. I forgot to point out the other day. That is a proper double. So, which was triggered yesterday. So 139.59, roughly where it's going to open, 140.99, and then the slightly lower, probably final target, I would choose 142 versus 142.40 as the final target. What else? I think that's about it. All right, remember, Labor Day on Monday. So futures markets are still open. Futures markets are still open. They still open Sunday night, normal time. They halted early, especially the equities are halted early. So you got to keep that in mind if you're still trading. But equities, the NYSE and NASDAQ are closed. With that, I hope everyone has a wonderful holiday weekend if you are in the U.S. And if you are overseas, as many of the viewers are, I hope you have a wonderful weekend and a quieter trading day on Monday. You want PayPal, Alan? We'll wrap it up with Alan's request for PayPal. I was waiting to have a... Sorry, you can do whatever you want, Sterling. I'm just joking with you. But I don't know how I am not more important than Twitter. I don't know how I'm not more important than Twitter. Really, anything, I'm still bearish on PayPal overall. Now, you got some divergence. We got weekly cycle bottoms in the short term. It can stay with slight bullishness, but you really have to start taking out this 66.92, and then you still on a closing basis 69. So I'm watching more for rollover plays here from PayPal. That's really about it. If it does go higher, next target I would utilize. You have a breakdown. I don't know if you're bullish or bearish. I'm personally watching for rollover plays, but the next target area would be about 65.40 to 65.85 on any bullish move. You're welcome, Anissa. You're welcome, Eric. You're welcome, Alan. So I would be cautious to the bullish side. If you are bullish, I'd be personally more aggressive with trailing a stop. And keep an eye if you start breaking back below about 62 on a closing basis. S&P coiling into the open. Let's just a 5-minute basis. Yeah. So we got this. Let's form this little breakout. So even, I mean, unless you got key support going in the open about 45.38. So unless you start breaking down from there, I'd be watching for the, again, as Sterling put it, the coiling move. And we do have the probabilities higher. And pay attention to this 15-minute rising rotation zone. With that, again, have a wonderful weekend, a wonderful long weekend. There will be no live stream on Monday. All right, no live stream on Monday unless something happens that I have to touch on. But then it would be a very short one, not expecting anything to happen, not expecting any shock in the markets. That would be the only way you'd see a live stream on Monday morning. Otherwise, I will see everyone on Tuesday. Bye for now.